It was almost a nothing session, amazingly, for the Australian share market, given all the news flow that we saw over the weekend, one in regards to Greece and two in regards to China and efforts to stabilise the stock market over there. All in all, by the end of the session, the market was down 1.1% and volumes were extremely low, $3.1 billion being traded through the ASX. So there was no panic selling, there was no panic buying. It was just a typical Monday in terms of volumes going through, despite the extraordinary news flow that we saw. In terms of the news flow, I guess it did have a negative impact on the market. We did see every single sector trading lower. And in particular, it was those growth sectors of energy, materials and discretionary, which were the worst performing, and the best were some of those defensive areas. So the telecom sector doing quite well, as well as the healthcare sector on the market today. But all in all, while the market was down almost 2% at one point during the session, you can see that coming into the close today, we did see some buying. I think there's still a bit of optimism that we may see a deal being done with Greece and the EU, but also, you know, they've been kicking the can down the road for 5 years now. That's plenty of time to try and contain the risks from a possible Brexit. So I guess we're in a very different scenario from around about 5 years ago, and we've been talking about a possible exit from the Eurozone for around about 5 years now. So it does look like the market's really quite shrugging it off, which has been incredible. Even gold during the Asian session, which was initially up, was trading lower at the time I came on air. The gold miners, though, doing quite well, especially those gold miners with Australian assets, and that's not surprising given that we have seen the Aussie dollar trading at a 6-year low today.
Throughout the show, so I want to move to other stuff while we can. And Julie, one of the other major stories, albeit to a degree overshadowed by Greece, is the ongoing question mark, if you like, in China, in particular Chinese equity markets. We really saw an encapsulation, if you like, of that in today's session. We saw the Shanghai Composite open up almost 8%. We saw it then down, I think, about 0.5% not that long ago. It's now just pushed back into positive territory. A lot of talk about deleveraging. We're seeing central authorities over in China look to step in to try and keep the rally going. I mean, it's quite extraordinary.
It is extraordinary. I think this might have the bigger impact in terms of the Australian share market and in terms of the Australian economy, just the volatility that we've seen in the stock market over in China and the impact that would have in terms of the Chinese economy and in terms of the Australian economy. The two sectors we always watch in this space is the materials space, especially those iron ore miners. And if you have a look at those iron ore miners, well, most of the banks as well as the telecom stocks bounced back very strongly throughout the session. We didn't see that bounce back in those iron ore stocks. So iron ore prices were down on Friday. They were down once again in China. And so we're watching that very carefully. And if we have a look at the banks, often they're seen as a derivative on the Australian economy. We are seeing the property sector doing very well at the moment, but if we continue to see a negative impact from those miners, that could have an impact in terms of the banks as well. So we're watching especially the materials space in regards to this. China, of course, made some incredible moves over the weekend. There were 3 moves. One was a suspension of IPOs. Second was a market stability fund, which includes 21 domestic brokerages, and they committed to 15% of their net asset value combined to try and help the market. So that equates to about $19 billion US. And then finally, liquidity through the China Securities Financial Corp as well. So looking to prop up the Chinese market and the extreme volatility we've seen there. The Chinese stock market, the Shanghai Composite, initially opened up 7.8%, but that was the peak for the day. It was all downhill from there, and at one point even fell into the red. So that's extraordinary given the very bullish measures that we've heard being announced over the weekend. So it's going to be interesting to see what the Chinese authorities can do to try and stem the volatility that we've been seeing in terms of the Chinese market.